Good morning and welcome to the Morning Bell. I'm Robert, joined by Lizzie and Steve. It's Monday, June 8th, 2026, and we're seeing markets attempt to stabilize after last week's tech-driven sell-off. Lizzie, what are the main themes you're seeing in today's news?
Thanks, Robert. The dominant story is this rebound attempt we're witnessing after the AI-led sell-off that shook markets last week. Major indices jumped today with the Dow, S&P 500, and Nasdaq all gaining ground as chip stocks found their footing again. Micron's bounce back is particularly notable, with analysts calling it evidence that the memory trade is alive and well despite recent volatility. What's interesting here is the market's interpretation of last week's pullback. Morgan Stanley's top strategist is calling this a healthy reset rather than the beginning of something more sinister, and I tend to agree with that assessment. We're also seeing significant corporate activity that's adding to the positive tone. Corning shares jumped 4% after announcing a deal with Amazon to power AI data centers across the US, which reinforces the infrastructure build-out story that supports the broader AI thesis. On the geopolitical front, we've got Iran announcing an end to military operations against Israel, though they're warning that strikes on Lebanon could trigger escalation. That uncertainty pushed oil prices higher, which is something energy traders need to watch closely.
That's quite a mix of factors. How are you reading the market's interpretation of this rebound? Is this genuine buying interest or just a technical bounce?
I think we're seeing a combination of both, but there are some quality elements here that suggest this isn't just short covering. The fact that we're seeing selective strength rather than indiscriminate buying is actually encouraging. Investors are focusing on companies with solid fundamentals and clear AI infrastructure plays like Corning, rather than just piling into anything that sold off. That selectivity suggests smarter money is stepping in. However, we need to be cautious about the geopolitical backdrop. Oil's reaction to the Iran situation reminds us that external shocks can derail even the most technically sound setups. From a technical perspective on the indices, the S&P 500 is testing resistance around the 5,250 level after bouncing from support near 5,150. If we can hold above 5,200 through this week, that would be constructive for the bulls. The Nasdaq is showing similar resilience, bouncing from the 16,800 area and now challenging 17,200. The key for tech is whether we can reclaim the 17,500 level, which would signal that the correction is truly over.
What about the Dow? It tends to be less volatile than the tech-heavy indices.
The Dow is actually showing relative strength here, which makes sense given its lower tech concentration. We're seeing it hold above 39,000 after testing support around 38,500 last week. The 39,500 level is the next meaningful resistance, and a break above that would suggest the blue chip complex is ready to lead higher. What I'm watching closely is whether this rotation into more traditional value names continues, or if money flows back into growth and tech. That rotation dynamic will tell us a lot about investor confidence in the near term. One concern I have is the volume profile. We're seeing this bounce, but volume hasn't been particularly heavy, which suggests some participants are still sitting on the sidelines waiting for more clarity.
Given all these crosscurrents, what does this mean for traders and investors positioning their portfolios this week?
For active traders, this is an environment where you want to be selective and nimble. The rebound provides opportunities, but you need to respect the volatility and use appropriate stop losses. I'd focus on names that have clear catalysts rather than trying to catch falling knives in areas that are still under pressure. For longer-term investors, this pullback has created some interesting entry points, particularly in quality tech infrastructure plays. The Corning Amazon deal is a perfect example of the type of story that has legs beyond just a one-day pop. Companies providing the picks and shovels for the AI build-out continue to look attractive. I'd also keep an eye on the energy sector, given the geopolitical premium that's being priced back into oil. If tensions escalate further, energy could provide a hedge against broader market weakness. Risk management remains critical here. We're not out of the woods yet, and while the technical picture is improving, we need confirmation that buyers are committed to defending these levels. I'd be cautious about going all in just yet and would prefer to see a few more days of constructive action before getting more aggressive.
That selectivity is going to be key in this environment. Let's shift our focus to the crypto markets now, Lizzie. What are you seeing in terms of trends for Bitcoin, Ethereum, and Solana heading into next week?
The crypto space is showing some interesting dynamics right now, Robert. Bitcoin is in a cautiously bearish to neutral posture as we head into next week. We're seeing BTC hover around that critical $60,000 to $63,000 range, and the price action here is absolutely crucial. What's notable is that we're seeing the most oversold conditions since the 2020 crash, which historically has preceded rebounds. MicroStrategy just added another 550 Bitcoin to their holdings with a $100 million purchase, signaling continued institutional confidence despite the weakness. The key level to watch is $60,000 on the downside. If that support fails, we could see a more significant decline, but if it holds, we've got a potential short squeeze setup with about $2.6 billion in short positions that are vulnerable. The sentiment is showing signs of seller exhaustion, which could spark a relief rally toward the $64,000 to $70,000 area if conditions align. Ethereum is in a more challenging position, having hit a 13-month low recently. The technical picture is bearish, and we're seeing some organizational concerns at the Ethereum Foundation with staff cuts. Though Consensus founder Joe Lubin is downplaying crisis talk, the positive element is that institutional players like BitMine are making significant ETH purchases at these lower levels, which suggests smart money sees value here. The $1,400 level is being mentioned as a potential downside target, but the oversold conditions may limit how much further we can fall. Solana is showing bearish tendencies with recovery signs mixed in. We saw Sol hit a 3-year low, which was a significant technical breakdown, and there's been notable whale selling creating overhead supply. However, we're also seeing some recovery attempts and rebounds that suggest buying interest at lower levels. The $50 level is critical support to watch. If we break below that, the technical damage could extend, but if we hold, there's potential for a move back toward previous resistance levels.
What about institutional versus retail positioning in Bitcoin specifically? Are we seeing a divergence there?
That's a great question. And yes, we're seeing an interesting split. Institutional sentiment has actually flipped compared to where we were back in February when Bitcoin was also near $60,000. Back then, institutions were more cautious and skeptical, but now we're seeing firms like MicroStrategy, BitMine, and others actively accumulating on weakness. They're viewing this pullback as an opportunity, rather than the start of a prolonged bear market. Retail sentiment, on the other hand, is more fearful right now. The correlation with Nasdaq weakness and concerns about competition from AI stocks and tech IPOs have retail investors more hesitant. There's also chatter about quantum computing risks, though Bitcoin developers are working on quantum-proof solutions with BIP 360. The funding rates dropping on Bitcoin futures suggest that leverage is being flushed out of the system, which is actually healthy for a sustainable bottom formation. Overall, the divergence between institutional accumulation and retail fear is typically a contrarian indicator that suggests we're closer to a bottom than a top. For next week, I'd characterize the outlook as range-bound with high volatility around key support levels. Bitcoin needs to hold 60,000, Ethereum needs to stabilize and show some organizational clarity, and Solana needs to prove that the whale exodus is complete. All three are showing oversold conditions that could spark bounces, but confirmation is needed before getting aggressively bullish.
Well, that wraps up today's Morning Bell. We've covered the market rebound attempt, the technical levels to watch across major indices, and the crypto landscape as we head into a pivotal week. Remember, do your own research and consult with financial advisors before making investment decisions. The markets are showing signs of stabilization, but as always, risk management and selectivity remain your best tools in navigating uncertainty. If you found today's discussion valuable, please subscribe to the Morning Bell and join us tomorrow as we continue tracking these developing stories. I'm Robert, and we'll see you next time.